All right, folks, welcome to Predicted Trades. We're going to cover a little PowerPoint that I put together to help explain our system, and then we'll look around at some charts, some live examples of some of the trades that we took today. So the goal of our system is to help you easily maximize profits trading options with our algorithmically reverse engineered market maker levels, right? We like to think we can provide an amazing edge with one of the only forward projecting indicator services out there after we reverse engineered what we like to call these market maker levels. It's a complete trading system and we try to give some expert guidance all day long in our live trading room, all day, every day. And we, do provide one-on-one mentorship to people. It's included with your subscription. So, how can we help retail traders? And how can you benefit from our system? Options can be difficult. Not most people understand how to calculate fair value. Most people don't understand the relationship between your options and your equity. And most people don't know how to measure risk properly when they're getting into a trade. A lot of times you're in platforms where you're watching the equity chart, you see SPY drop down to 365, you think, okay, I'm going to buy here. And then the option that you're trading continues to lose value even if we just sit at 65. That's where we try to come in and help, to say here are key levels on your options charts and where you want to take action and risk against. And market makers are out there to do a lot of tricks around key levels to mess with your options price to try to scare you out of the move. So we try to help with that as well. We'd like to think we can provide pinpoint accurate market levels. There are also algo levels, big money levels, risk management levels. You can measure potential and probability with our system as you get more familiar with it. And we like to strive for everyone in the room to have consistent profitability. We have some simple rules that we follow daily. We help you learn the patience to only trade when the time is right, how to keep your losses small, keep your winning trades big. And we try to not guess where something's going. We try to react at the key levels when we should. The heart of our system is this beast zone. This is from a couple of weeks ago, the Apple 140 put. You can see whenever price got down to that beast zone, we get a bounce. They bring it back to that beast zone, another bounce, back to that beast zone, another bounce. And at the end, these went about 10x from that 17, 18 cents to 180. But they're not always going to make a 10x move in the same day. And you can see they like to make part of the move, make a little more of the move, and do it again. These are the levels that we try to provide. Over here are just a few examples of just a couple of days. I think this was 2 weeks ago in the room. We obviously do have winning trades and losing trades. And you can see those losing trades, they were kept to about 10, 20 cents. Those winning trades, some of them went 10x. Some of them went $1.20 to $1.40. So not that big of a win, but still we were managing our risk properly. And that's what we try to teach in our room. So let's start talking about levels with our PT system. This is the options chart, but real quick, I'm going to go over to the equity chart because it gives the full shot of our system. Every day, I post a tool that you can load on your charts. It will work on your equity and your options depending on what subscription level you sign up for. It will work on different charts, different tickers. So basically, the way this tool works, the big white hash line is our center line. That's where we open on the day. This is SPY from 9:30. And you can see we open the day and drop to our open range buy zone. This is where during the open for the first hour or so, we're watching this buy zone and sell zone to see what is the intent of the day? They drop it, you can see a couple of quick pops up to our sell zone. They drop it to our buy zone, up to the sell zone, and then we hold that day's open and start to push higher. So every day we're watching on our options and our equity these key levels. And yes, some are buy levels, the ones below our open, and some are sell levels, the ones above our open. In a way, every level should be treated as support and resistance at any given time of day that we arrive at it. So on this day, 9:30, you could have had a thesis. I'm going to buy in this open range buy zone, lock some profit in the sell zone, maybe add, but as long as we hold the open, we can continue this drive up. And that drive lasted for about the first 2 hours. Then when we start to give up, this midline up, this is one of our sell areas, right? This is our destination sell zone. If we were going to drive up all day, sometimes it's a slow move to get up to this destination sell zone by the end of day. Plenty of times we can pop up to this sell zone quickly and then we fade back the rest of the day. We might see some examples of that as I go to the live charts. But on this given day on SPY, we fought up to this midline. Once we gave it out, it's back to our open. We can't get through our open range sell zone. We go down to the buy zone for a test again. We can't get going through our open. We head further to our purple hashed lines. This is the midline down, just like that midline up. And we ultimately made it down to this destination zone right near close. So all throughout the day, we're watching these levels and price action to put together a thesis. It was a long at open, then a short back. There are many times that we fall back to this open range sell zone, and if it's a bullish day and we can continue, we bounce there or at our open level, just thus confirming we have spent the majority of our day over open. A lot of times we can bounce at that sell zone or that open level to continue up to our destination sell zone. But there are always rules. We catch our bounce and we can't get going through that level, then it leads to a thesis for further down. So constantly throughout the day, we're just trying to say, if we can hold here, then we can go there. It's a lot of if this, then that. I'm an engineer, I'm a coder, so that's kind of how I like to operate in my trading. So from the slide, I think I've covered everything over here. This is basically just detailing each line and what it means. But just to review, we have our open level on the day. We have an open range buy, an open range sell. At open, the market makers are trying to balance the market. And so we watch interactions with this buy zone and sell zone to try to glean or, get a sense of what the market makers are doing to balance and who's stepping into control, buyers or sellers. And as you see more and more examples of this, it will start to kind of stick that we try to enter at buy zones, we try to go short at sell zones, and we work out where the market's going from that. So let's hop back up to options charts. I went with the equity first because you don't always get that destination buy zone on your options chart. You can see 0 sits here, so anything that plots under 0 is should be disregarded, right? We're not going to buy options at less than 0, so either way. Same thing on our options charts. We have today's open, we have our open range buy, open range sell. The thing that's different on our options charts is the beast zone. This is just what we've called it. It's what stuck one day. And basically that beast zone is the heart of our system and the heart of what we look for in options charts. We like to think of it as our major buy zone, our weekly buy zone. So just like on that Apple example, every time we hit that weekly buy zone, we kept bouncing again and again. So we have our weekly buy zone, and then all of the shaded levels are our intraday zones, so that when we are way up above our weekly level, we still have levels to play off of to try and manage those trades, to try to go for more, that kind of thing. We fell back to our beast zone, we gap up, push to our purple, fall back to our open range sell. There's a great spot to go long from 60 cents up to $1.50 on this day. Okay, so back to the options chart. That's the only thing that's different is you'll get this beast zone, a weekly buy zone, a major buy zone. So we always watch that. And there are plenty of times, depending on where we open, where we get overlap, where our open range buy zone, it sits with our beast zone, which can sometimes add some extra strength on bouncing there. But we'll see examples of this as we go on. Whether we're trading a call or a put, we strive to enter either at our open range buy zone or our beast zone. We also time these entries with levels on the equity charts. So let me talk a little bit about that. Aligning our system on equity and options charts. So I'm going to talk for these examples and some of the trades that we took. On 9:30, again on ES, using this as an example. On ES, we open a little bit in our open range buy zone. With ES, it's plotting the open from the overnight session. So when futures open at 6 p.m., that's where it plots the open level. So that's how during the cash session we could actually open in this buy zone, take a little dump to another one of our indicators called the squeeze cloud. I'll get into that later, but it basically just plots on your chart higher time frame squeezes and where the top and bottom sit. So on ES, we dip down there, we start to take back off. But over on SPY, it's going to plot the open from the cash session open. You see we got our open, dipped down to that buy zone, worked up to that purple line. We've already kind of covered that chart. So how do we line that up on our options charts? If we follow this line down, on our options chart, that 363 call, and if you look, 363 is in our open range buy zone. So a lot of times folks ask me, what strikes are you watching at open? I'm usually watching ones that are close to our open range buy and sell. Of course, we don't see that until we get our open level plotted, but once it is, and I can kind of tell from where we're opening, I want to be watching so much up and down. So I was watching those 363 calls since it's in our open range sell zone. We can get up to it, we can push past it, but those can get in the money easily. On those 363 calls, we open, we dip down to our buy levels at $1.34. That's where we get in, and we're holding up to this shaded region above our open range sell zone at 357. Right? Then about the time we are locking up our locking up our calls after we got over this midline, the same time we're locking our calls, right at about 11, we're still watching our puts, which gave out their open range buy zone and fell down to their beast. Those hold their beast and start to pop out. This is where we're getting in long about the same time we're locking up our calls. We had a thesis with an entry and an exit. So we ride up to that exit, we lock up the core of our position, and we maybe leave runners in case it continues. But we take position on the puts at about the same time at one of our buy zones. These go from 60 cents, 70 cents, 60 to 70 cents, in that little beast zone. And by the end of the day, they get back up to $4. What is that, like a 5-6x trade? And again, all throughout the rest of the day, we're able to say we're playing off of this level to get up to this level, leaving runners for the next level and continuation. we can see that SPY sold off the rest of the day. ES sold off the rest of the day to our target levels below. So we work off of these back and forth. This is very similar to what happened today. We played calls off of buy zones, locked them up at sell zones. Then we switched to puts at other buy zones and rode them up to sell zones. I'll definitely go over the trades we took today. Real quick, before I move on, I see there's a couple of questions, so let me address those. Do you use liquidity in your coding that is seeing where the orders to buy and sell are? So basically, are you asking, is volume a part of this system? We're always going to be watching key strikes that have a lot of volume, and the more volume that we get, let's just say the better that these levels work out. But it's not a key component in how this is all calculated. 309, can you elaborate more on the beast zone? What are the colors or lines? Yes, I can. So let me go back to, here we go. The beast zone on your options chart. It will only show up on your options chart. It is this blue hashed line and this red hashed line. That blue and red hashed line that has no shading, because you can see we do have other blue and reds, but they have shading. So on your options chart, and let me even go back to this as an example. On your options chart, you're going to see all those shaded levels for intraday play, but the beast level is that blue and red line right down here. That is the weekly buy zone. We never know if we're going to hit that weekly buy zone on a Tuesday or a Thursday, whatever. But the point is, when we arrive at that weekly buy zone, it is the major buy that we should be watching for. And we use our shaded levels for intraday. Hopefully that helps answer your question. How do I determine these levels? These levels that you are seeing, all of these shaded regions that get plotted, all of these levels on your SPY chart, it's all based on our proprietary algorithm that calculates specific key levels that market makers should react with. Market makers, big money algos, they all kind of react in certain areas every day on your equity and your options charts. A lot of us do our technical analysis on the equity, and we base our options trade off of those levels from our technical analysis. The point of this system is now you have key levels on your options chart just like you would on your equity chart. And when you put it on both your option and equity, you see things line up. For the long in the morning, those hit the buy zone first, so we take those. Just like SPY hit the buy zone first, and we ride that up. But then there's a key point in the day where if we start to lose our buying power, our buyers that are sending us up, we're going to fall back down. Those puts at that exact moment in the day are at a buy zone. So we gauge things just like that. Point being, if you take a shot in our buy zones, you kind of know what you're risking. If it breaks below that buy zone, you get out. So if you took a shot on puts early in the day at this open range buy zone, the second it starts to give out, you cut for a small measurable loss. Another question, do you always buy when it hits the buy zone? It can fall through sometimes. Yes, absolutely it can. You can see on these puts, we fell through our open range buy zone at around 10:30. You can see over on the calls, around 10 or 10:30, we were setting higher lows off of our tap of the buy zone where we got in at $1.34. So as long as we keep setting higher lows, the call can continue, the updrive can continue as long as we keep holding above our open and pushing through our sell zone. We watch both sides of the trade and measure what's going on throughout the day. So we don't always buy necessarily right when it hits our buy zone. There are plenty of times where it hits our buy zone, settles into the bottom, then starts to ramp out. As you get used to the system, you start to learn when to get in those buy zones. There are plenty of times that we tap them and take off. So you do need to catch the first bounce. That's usually earlier in the day. But as the day progresses, you can see a slow settling, like from 11 to 11:30, we sit in this buy zone before taking off. We'll see more and more examples of this as we progress through this presentation. Whoop. Okay, so we're done with this slide. It looks like I got through the questions. Let's move on. So every day, this kind of provides a daily roadmap, right? Let's talk about that Apple trade again. Let's say you come into the week with a thesis that Apple, hold on, we got a little spammer going on in here. Let me take care of that. There we go. Like any service or anybody on YouTube, we're getting spammers all the time. So sorry, I had to take care of that real quick. So let's say you start the week on a thesis, Apple could go down to 140 this week, right? We open the week up in this range around 150, 155. But whatever technical analysis, whatever's going on in the market, you have a thesis. Apple could go down to 140 this week. So you watch the 140 put if you're used to watching options charts. You're constantly thinking, when should I enter this 140 put? Well, with our system, we are giving you targeted prices that are the optimal prices to get into that option. Again, this is that same Apple same Apple put that we saw on a previous slide, and how every time it got to our weekly buy zone, they bought it up. You get a gap up, they bring it back. They buy it up, you get a gap up, they bring it back, right? And then we also have our intraday levels to help out. Let's say you're in that trade. You know, we got up to this purple line where we can see a rejection, you lock profit, it comes all the way back. You get in end of day for another swing. Again, you get the purple line, lock up some profit. Oh, it holds here. Just like I said, we can hit that purple, fall back, then move higher. You know, basically every one of these levels is intraday support and resistance for your options chart, which no other service provides. There is no other service that gives you something to put on your options charts that will give you levels of support and resistance. So as you can see, every time we hit that beast zone, they rallied. From what we find, if Apple is not going to drop down to 140, you know, it's sitting up, let's just say, in between these key levels. If they had no intention of taking it to 140, they would not bounce it at the beast zone. But even on Tuesday, when we're still up in this range, they're picking it up at that beast zone, and it's gaining value. So these levels can be thought of as, where are market makers leaving their footprint? Where is big money leaving their footprint? If there is absolutely no chance of going to 140 this week, we would have seen this beast zone give out. And I know that's a low price. You could say, oh, it'll give out, but it'll go back through, yada yada. But point is, you can see for this entire week on the market, it held. So we like to think that beast zone is a weekly level where they will buy it if they have an intention to take it to 140. You can see by the end of the week, we got that 140. These went in the money. And even on the final day, they held that beast level and went up to new highs, topping out at our intraday exhaustion zone. You know, in a game of probabilities, this system can kind of give you the best edge around. You know where to risk to get in for this thesis of going to 140. You know the best price all week to pick that up. Let's say you're just a swing trader and you're wondering where's the best price on any one option. Well, now you have a good idea. And if it gets there, it's worth the shot. If it dumps below that weekly buy zone, then you know that the probability is losing chance that it will happen, right? So here's another example. In this example, we did rally all day up to that destination sell zone, right? At open, we're watching calls and we're watching puts. SPY open right around 364. So we're watching the 365 put, the 365 call. So that means this was most likely a 0 day, and so opening right around 365, why not just watch each in both directions? You can see that by 10:15-ish, call it maybe 10:30, we knew that this was not going to, the put was not going to rally off our buy zones. The only next stop is our weekly buy zone, that beast zone. Once that gives out, we know we're not going down on the day. And as we watch SPY hit our buy zone, take off, hit our sell zone, come back to our buy zone, and then start pushing over on the call, we can see that we open at our big major weekly buy zone. Sorry, these little labels are a little off. This one should be down here and that one should be at this blue line. But on this given day, these 365 calls fell down to our beast zone around this 150. Looks like 125 or 128, right? So that's our little buy zone. It hits there, tries to get going, goes into it, buyers step in and push real hard. And from that $1.30 to $1.50 buy zone, those went up to $7 on this day as SPY and ES rallied from our buy zones to our destination zones, right? And like I said, when the 365 gave up its open range, that added confluence. When it gave up the beast zone, that added more confluence to hold to close, and that we could rally all day. Sorry, I'm seeing a couple questions roll in. How do I determine what strike to look at? It's a great question. On this day in particular, we open around 365, 364, right? So I'm always going to be watching some close strikes like the 366, the 363, something that aligns with our open range buy and sell zone. Then I'll be watching a further out strike near our destination zones like the 370. So, 366, 370, 353, 360. I'll be watching all of those strikes just to get an idea if further out strikes or closer to in the money strikes are reacting with their buy zones. I see another question. Is there a cheat sheet that explains the colored lines? Yes, it's in this presentation, like right here. Here's the overall roadmap. Today's open is the white line in the middle. We've got a buy zone below, a sell zone above, and then should we push further, we have a further out sell zone, a further out buy zone. And this PDF will be available for everybody to have a copy of. So you can print out this sheet and put it up until you get used to looking at this. But basically, you got your open, buy, and sell range. And then if we push out of that open range, we have where can it get to on the day. So every day, these beast levels on option charts give retail traders the best edge around against market makers and big money. Our mathematical algos calculate the precise levels that market makers and algos are interacting with. This is all provided in advance so that when the day opens, you know all of the levels that you want to react with. Where you want to buy, where you want to sell, all becomes very visible when the charts open. And we provide the tools before open every day. That means the beast system is one of the only forward plotting indicators. It's not a lagging indicator. We are projecting levels in the future that you will see your options charts react with. We see it every single day in our room. Every day we get these charts with these levels. Options prices and equity prices are going to interact with these levels. And so we have learned over time where we should be taking risk, where are the buy zones, what are the sell zones, and at any point in the day, each of these levels is support and resistance. If we open on the day and puts shoot up first to their sell zone, we could expect that we get a rejection and back to our buy zones where when we get that rejection, the calls are hitting their buy zones. So we're kind of just playing the waves against each other. And our levels also help you manage risk. You get in at $1.50, $1.30. If it drops below that, you get out. Like I showed on one of the first slides, most of our losses are kept very small because we're able to measure our risk. And if it can't hold the buy zone, we get out. We made the wrong call or the wrong direction, and that's fine. So let's see, I see a few more questions rolling in before I get into playbook setup, so let's answer some of these. How do you determine which, I did the strikes, the cheat sheet. What is the logic behind using 3-minute charts? As a retail trader, I've heard educators use 1, 5, 15, and daily. Oh, okay, that's a great question. Why do I love 3-minute charts? I can tell you that during the day, mostly I'm on a 1-minute chart, but I do a lot of times switch to a 3-minute chart. The idea behind that is it can smooth out some of the noise that you get from a 1-minute chart. There's plenty of times where you see it dump one candle and then pop back the next 2 candles. Well, on a 3-minute chart, that just looks like a little wick and then a big candle up, right? It is a little better resolution than a 5-minute chart where you could, see a 5-hole 1-minute candles represented in one 5-minute candle. On a 3-minute chart, it's a slightly better resolution than a 5-minute. And 3-minute is divisible into those 15 minutes, 30 minutes, and so on. So that's one reason why I like to use 3-minute charts here and there. How do you switch so quickly between calls and puts, and how can we trade like a robot or algo with no bias? So that's a good question as well. There are plenty of times where, like today, we got in calls at their buy zones after the market had a little dip and then started to take off. When we get to those sell zones, I'm watching the puts to see how they're interacting. Are they really bouncing at their buy zones, or are they starting to slip through? But one way that I kind of switch back and forth, I've put out a video on how to do OCO orders, which basically an OCO order is like a bracket order, if you're familiar with that in any other platform. Basically, it allows you to get in at a price and at the same time have a stop and a take profit set. So I can say, even myself, I don't love hopping in and out of trades, calls, and puts really fast. But what I will do is throw an OCO order at our buy zone on the call. Once it gets filled, it has a stop, so it's measured loss. Usually I do like a 25-30% stop below my entry at a buy zone. And then I have take profits built into that OCO order. It'll plot it on my chart, and I can drag those take profits up to our sell zones so that I can drop orders here and there at buy zones on our calls and puts, and as they start to fill, those orders can kind of manage themselves because they have a stop and a take profit, and you let it play out. So that's kind of one example. And I do have a video about that. I can give you a link after this is done on that OCO video. So on to playbook setups. This is something that we've seen over time with our options charts, different setups that, and basically with these levels on options and equity. So one is the open gap fill. This has to do with obviously any gap up or down on the market. In this little example, on the previous day, Apple rallied, so these puts, it's a little hard to see, but it's the 167.5 put. So on the previous day, Apple rallied, these puts fell down to our little beast zone, our weekly buy zone. The next day we open right near that beast zone, we push into it and hold it. So we would start to take this long, and you look for where the previous day's open was. It was up here in our destination sell zone. So overall on this chart for this given day, we take a long at our buy zone. The overall target we're reaching for is that previous day's open, so that this option can fill the gap from today's open back to yesterday's open. And the same thing happened on Apple. It rallied up one day and then it engulfed back the entire previous day and sold off. So it filled the gap up and the rally back, while this put went from its open level to the next open level. I know that may seem simple. Yeah, it's a gap fill back down, but point being, those puts landed in our buy zone near close, pretty much opened and reclaimed it. That's where we see a good reason to take a long back up. Obviously, if those had fallen back and set a new low of day, we get out. But you know, overall this went, let's see, about 20 cents up to $2 for a full 10x. And we have our levels that we react with. You can even see midday, these puts pulled back, meaning Apple had a pop, but we had a level there that we tagged, you know, around 50 cents to complete that journey up to $2. So, some more playbook setups. We can have our morning dip and rip. That sometimes sets up for an afternoon dip and rip. So that's kind of what we're describing over here. You can see on SPY and ES, we open, dip to our buy zone, open, dip to our buy zone. That's our dip that we go long for the rip. We hit our destination sell zone, we pull back, and we hold the previous day's open, which is that white hashed line, right? Today's open, big thick white line. Yesterday's open, little white line. It's something that we like to track on everything. So this is just another example, and on these calls, they open, they dip to our buy zone, our beast zone, at about $1.30 to $1.50. They ride up and rip to $5. We get our afternoon dip at the sell zone, what used to be a sell zone, but now that we're above it, it can become support. We also have a trail line. That may be something that I didn't cover, but in this tool, when you throw it on your options chart, there is a little trail line that follows the option price. The whole idea is, as this starts to work out off of our buy zone, that trail line can be where you set your trailing stop. And as it rides up and pulls back to it, you move your stop up. When it holds the trail line, it's a chance to get back in. You know, even at this trail line and at this open range sell zone, you could have got back in at 380 and they went to $7 on this push on this given day. Even the 370 calls. So you asked about what strikes I watch. The 365s are about where we open. The 370s up in our destination zone. Those 370s open at our beast zone, slip below it, but once they start to reclaim it, and even midday when they hold it around 50 cents, it's still a viable option, and you play those up to $2 where our next levels sit. Counter to the dip and rip is the pop and drop, right? So plenty of days when we have a down day all day, we will see SPY bounce up first to our open range sell zone, then it comes down to our buy zone, catches a bounce, sets a lower high at our sell zone, then makes the H back and falls to our destination zone. So just like when we see it open and slip down to our buy zone, then take off, we can see the opposite for a pop and drop. And even in the afternoon, we held that destination buy zone. They pushed off of it to our purple, so they get the afternoon pop just to drop it right back down. And I mean, come on, how accurate are these levels that get interacted with all day long? Plus, in that opening hour or two, you have a chance to go long, to go short, to go long, to go short again. And there are plenty of times when we are looking at the puts, we got them at a buy zone, we lock some profit, they retest that buy zone, even though we didn't get back up to high, the put itself fell into value enough to hit its buy zone. So, the next trade setup is the dump and pump to dump. basically that's where we open, we dump very quickly to our outer destination buy zone. We bounce from there to try to get back to our open range buy zone. We reject the previous day's open, and we fall back down. So we dump and pump, trapping everybody long just to dump again for new lows. A very important part of our system is time of day as well, right? If we push too hard in the first 30 minutes to our destination buy zone, this is where we are definitely thinking we're going to likely get a bounce to at least recover half of what we dropped. And you can see pretty much halfway is what we got by midday, which gave us the next short down. So time of day also very important. Just how hard we push to exactly what levels can give us a very good thesis. Everybody sees SPY drop really hard and then start to calm down. A lot of people start loading more short, but for us, we know we've arrived at destination. And from here, we can see a recovery bounce for at least half, if not more. We got that half and then right back down. So we are usually in our room very tuned in to time of day, reversals, and when we should expect to see them, right? 10 to 10:30, good reversal time. 12 to 1, another good reversal time. 2 o'clock, 3 o'clock, another good reversal time. The next playbook setup is the open range or midline range day. So this is where we can have chop days, right? On SPY, we opened and just ripped up to our purple midline. From there, we dumped pretty much down to our purple midline. This was a little bit more of a directional day than a chop day, but we have seen plenty of very choppy days where we are stuck in a range, and we usually find that we are staying between our open range buy zone and our open range sell zone. And the further out extent of that is just the midline play, right? On to the next. So we had an inside day into a morning dip and rip and an afternoon dip and rip. So here's kind of an example of a chop day. We fall to our open range buy zone, pop to our open range sell zone, back to our open range buy zone, up to our open range sell zone. SPY was pretty much trapped in a 5-point range, let's call it, around 385.5 down to 382, not even a 5-point range, very tight range. So we got a morning dip and rip, an afternoon dip and rip, and then the next day it led to taking off right out the gate, getting back up near those close and overnight highs, a dip back down to the previous day's open, and then up. So, afternoon, dip, and rip for more up to our destination. Basically, just every day, we're watching all of these key levels, and we're able to get confidence in taking a long from here, taking a short from here. If we go long here and it starts to break down, we can get out, right? And maybe we don't always take the first test, but once we start to see it hold and push, let's say you let it get down to this green line, once it starts to push back through this blue line, you should be trying that long up to the next blue line. When it rejects there, you should be trying a short right back. And we do that every day, just waiting for that open range to break and get more directional. So I've shown you a couple of examples where we take off from open. So that's the open rip, and the open hold and rally is similar, where we can take off from open, almost hit our destination, but we pull back and hold open. That is very bullish to get right back up to the highs. And we kind of had that open out the gate, dip back as long as we hold above open, continue up higher. So we do have a few other tools that kind of help complement the system that I provide at a very low cost. It's the whole tool package is just $100, not like other services that want to charge you $100 per tool or charge you like $1,000 for so many tools. It's just $100. You get about a dozen tools, and they help us out in our day trades. One of those things is watch list tools. So these are custom columns that I've coded to go in Thinkorswim platform. The first one is POC, point of control. This comes from like your volume profile. It's usually the highest node on any given time level or time frame. So I have one watch list column that tells me where POC is currently, so that if we start to drop and POC is within reach, I can think, oh, then we might get back to POC. Next is a percent buy. This is kind of a daily cumulative percent buy on any ticker. So you can see on this example, BA had a very strong day up. It was 100% buy, whereas coin had a little bit of a down day. Only 37% of the price action was buying. So this column can help us track throughout the day what's stronger, what's weaker, that kind of thing. Next is daily Keltner positions. So, the daily mean for us is the daily 21 EMA, and then Keltners are standard deviations from that daily mean up or down. Normally, when we get up near third or fourth Keltner on any one name, that is getting overbought or oversold. In this example, AMD had been on a rally and got over its third Keltner, so it highlights red to say, hey, we're getting overbought. So it's just something to help me keep an eye as far as on the daily, how far away from the mean are we currently. And then the rest of the columns are all squeeze columns. I'm sure we all know what a squeeze is. When the Bollinger Bands come inside the Keltners, when we have price consolidation, sideways action for any amount of time, squeezes start to set in on time frames. So in my watch list, I have 30-minute, 1-hour, 2-hour, 4-hour, and daily squeezes so that I can know on any given ticker just what squeezes are in place, just how long they've been in place. Are they starting to fire to the upside, to the downside? Is that squeeze bullishly oriented being blue, or is it bearish orientation being red? So just some of our tools in the watch list columns. Now it's on to what we put on our charts. One of the tools is daily moving averages. You've heard me talk about the daily 21. That's this white stair step line, daily 15, orange step line, daily 8, blue step line. And then I also have the daily Keltners. So the middle of the Keltners would be this daily 21 white line. This hash line is first Keltner down, the next one is second Keltner, then third Keltner down. We plot these on our charts every day because, as you can see, we can make a push from, say, second Keltner down, back up to close to the daily mean, pull back to the daily 8, make the full trip to the daily mean, start to go back and lose these daily 8 and daily 15, and head back to second Keltner down. Just more key levels to watch. The next big tool, this is one of the biggest ones in our arsenal, is the squeeze cloud. Just like I talked about, squeezes on my watch list. I can look and see that Apple, all right, now let's find another example. ES had a 30-minute, a 2-hour squeeze. So when I go to that chart, I can load up my squeeze cloud, this multi-time frame tool, and I can set it to a 2-hour or a 1-hour. Then I can visually see where that squeeze sits. This helps a ton when we have those morning drives into open and then dump and give it all back. Most people don't know we drove up to the top of a big thick squeeze. It's very hard to push through that. We need a lot of volume, a lot of momentum. Statistically, we find whenever we move into a higher time frame squeeze that is very thick like this, where we get multiple colors, statistically, we know when we open in one of those squeezes, we will likely see the other squeeze cloud. So on this day on ES, we open right in that squeeze cloud. We are looking short first. We hop in shorts, it works out. We lock profit, maybe we add on any pops, but the destination is to get down to the bottom of that squeeze. Once we got to the bottom, we get a little bit bounce to the middle into VWAP, and then back down to the bottom. In this example, you can see, I believe this is a 1-hour squeeze on the bigger time frame, and then there are some smaller 3-minute squeezes in there. You can see we rejected the 3-minute squeeze top right near VWAP to head back down. So, another one of our amazing tools that really helps every single day. Volume labels is the next one. This is something I put in my options chart so that I can see what are the previous day's daily volume on this option. It helps because on any given option, you will see a ramp up in volume day after day, which will add volatility to that option. So on this option, we could see it was down at, just a handful, then it jumps to 600, then it jumps to 24,000. Just means we were approaching this call at 358 being more important. Buy percentage labels, just like we saw on my watch list, this is the same buy percentage on the day that you can put on your equity or your options so that you can see for the day so far what is the buying volume, the selling volume, yada yada. Next is another tool I built to visualize buying and selling on a lower study, like an oscillator. You won't be shocked to find it's much like the price action above. We bounce out of open, buyers are in control, then we reject, sellers are in control, then we start to bounce, buyers take control again. The selling pullbacks are getting less than they were. The buying clouds are staying up above the zero line more and more. So it's just kind of a visual representation down near your volume to say, volume-wise, who's in control, buyers or sellers. And that brings us to the end of our presentation. So, for today, on the market, we saw ES open near its overnight open. It dips to its buy zone, takes off to that purple hash line, comes back to the other purple hash line. So this is much like the playbook setups that we just reviewed. Today on the market, we went long here on SPY contracts, XPX contracts, you have it. We held up to this purple line where we were locking mostly the core of our position. You can use anything like a moving average to start to mark the change in trend. You can see this is a 1 minute 55 EMA. If you're on a 1 minute chart, I recommend the 55 EMA to measure that change in trend and continuation. You can see we got above and he pulled back near it, continued higher, caught a few more bounces, but then once we broke below it, we started to resist it, and that's when the big drop started. So this is ES. Why don't we go look at some SPY options? You can see as I change tickers, the tool is going to update itself for you for whatever ticker you're on. SPY dropped down to our buy zone, took off, past that purple hash line almost to our destination sell zone, then it wedged at that purple hash line once it broke below and rejected. These are the breakthrough and retests we are looking for at a change of trend to go down. So on SPY, we'll take a look at, what was it? The 372 call was one that I called out, and then playing back, we've hit those 364s. So SPY 221021 call 372. That's how you type in an option sticker. In just a second, all the levels will pop up. And there we go. So on this one, the call slipped its open just a little bit. Ooh, and I hate it when that pops up. Here's a little tip for anybody watching. To get rid of the theoretical price, it's only showing up because I'm on a chart that's usually on futures. To get rid of the theoretical price, go to your chart settings. You can get there by hitting Control S like I just did, or hitting this cogwheel up at your chart top. You go over to options and you uncheck theoretical price. Now that silly pink line will never show up again. And I don't normally throw VWAP or moving averages on my options. It's on there because we were just on equity charts where I do throw it on. So let me just remove that so that we don't have any confusion. Get rid of VWAP. We'll get rid of, where's that moving average? Right there. Okie dokie, now we're just on the tool itself. So you can see on this call, did not get down to buy zone, but open range, very important. So once it holds, not going down, gets back over open range, we wait for this little retest to get in at around $1.60, and we play those up to these key levels above. They got up near $3 and then came back. So pretty much a full double from our entry. Around $1.50, $1.60 to $3. And maybe you caught it down here at 130, but I'd rather let it get through, let it retest, and catch that retest. Then I have a very limited risk from that 160 to that 130 previous low. Those calls worked out, we locked them up, and we switched to puts somewhere around 10:15, 10:30. So now we'll pull up that 365 put. Put 364 is the one I was calling out. 365 also works. We can look at both. You can see that 364 fell down to our beast zone. You could see it before the intraday zone showed up, but here's an example of where our open range buy zone is overlapping our beast zone, just giving us a little extra confluence. This is the buy area. Called these out today around that 52 cents, which is the bottom of our beast zone. You can see right here, 52 cents and 68 cents, right? So I said basically anywhere from 50 to 60 cents, this is a good trade to take as SPY was up at the highs. It took off from that 50, 60 cents. It got up to $2 at our open range sell zone. And at the previous day's open, that's where it rejected and fell back. Even fought right back to it one more time before coming back again. So this is one of the trades we called out today. 50 or 60 cent entry up to $2. About a 4x if you got in at 50 cents. So, that's kind of all I had ready to review with you guys, to talk about our system, how it works, what we look for, what are the buy zones, sell zones, all of that. Do we have any more questions? We're about an hour into this webinar, so it might be a good spot to stop it, but I definitely want to make sure I answer any questions that you guys have out there. So far from what I can see in the YouTube chat, I have answered everything. So here's your last chance. Type in any more questions that you might have. Or, even type in a comment if you're still listening, still with me. Let me know, how you like the system, if you're interested. Bottom line, we're options traders. There's never been anything like this to put on your options chart to know, if I'm going to play this put today, when should I get into it? Well, how about when it hits our buy zone and settles? It's a great spot to get in. You know you're risking only 10, 20 cents, whatever it is from this point, to go capture, $1.50. I'll risk 10 or 20 cents to capture $1.50 every day. Hey, Mon Man, I see a little hand clap. Hopefully, I'm guessing that's Monkey Mon. So good to see you. Glad you could tune in. Hopefully, everybody found this helpful. And this video will turn into a video on demand after this, so you can always go back to rewatch it. I'll provide that PDF so that you guys can have that cheat sheet of what every level is. It doesn't take long to learn. It's all centered on that open level. We've got our buy and sell zones, and we work off of those, taking risk in each direction as the day progresses. All right, thanks for the webinar, super helpful. All right, glad to hear it, everybody. It looks like there's no questions left. So I'm gonna go ahead and end the stream. Thank you all for tuning in. Oh, cool, I see you, Y-Trade. Yeah, sometimes it's hard to link the YouTube name, but yeah, I see we got Monkey Mom, we got Y-Trade, we got Carl Jones in here. Thank you all for sticking around. I'm gonna go ahead and end the webinar in the stream there. And you can always use the same link to rewatch it if you'd like. Thanks for tuning in. We'll see you tomorrow in the chat. Tomorrow we're going to have another free day so everyone can test out these tools on your options charts. They will not work on your equity charts like this one does. This is part of the paid service. Once you join the paid service, they will work on your equity charts as well. And I understand why, Trade, what you're saying there. Biggest challenge is understanding the direction on the day. That's why I try to come into the day very unbiased, and I try to just react to the levels, right? Today on SPY, come on. Okay, there we go. Today on SPY, we opened, we saw some little pops, but we haven't interacted with a buy or a sell. So I wait. I let it fall to the buy, and I start taking risk, right? I'm going to react at the first level we get to, because the first test is always going to be the best test. Plenty of times, we'll hit the top of the zone, slip into the bottom, maybe just dive on through, but plenty of times we hit it and start to bounce. So, a lot of times I try to come in unbiased, and rather than think, oh, we're going up to this, I have a thesis that if we can hold here, we can go to here. If we give this out, we can go to there, that kind of thing. So every day I come in and try to be as unbiased as I can, and then I just start reacting. We hit a buy zone first, going long. We're getting through our sell zone, holding my long. Oh, we made it to destination, locking up most of my position, leaving runners in case we go further. Starting to watch puts. Puts are gaining value, they come back. Puts are gaining value, they come back. if we go back to that example of that SPY, put 364, you can see it got into our buy zone. It catches a bounce, goes back down to the bottom, catches a bounce, back down to the bottom, bounce. This is what's going on that put when SPY was setting lower highs on every bounce that it had after high of day. And so just like we went long off of the buy zone on SPY and the calls, when we're locking profit at sell areas on the calls, and when SPY is approaching sell areas, we're watching those puts. And as we see them settling right in our buy zone, we're going to take a shot there as well. I just say all this to say that I totally understand that feeling, that biggest challenge determining direction. Do I go long or short at open? I like to think that this tool is going to help us every day to gauge if we're going to go up, where's a good spot to go up from. Every day, I'm going to take a shot at that buy zone if we dip there right after open. Just like any day that we pop up first to the sell zone and then start to come back, I'm going to be entering a short back down to the buy zone. So in a way, rather than picking, and this was actually in my PowerPoint, not to pull that up and revisit it, but it, I cover so many things that it's something that you can forget. Key point, we don't need to guess, but we should react when we should, right? And that's what this system is meant to help you do. We are hitting a buy zone, time to react, take a long. If you don't feel like the market's really going to go up today, you can skip the long and wait for the short, right? But I try to come in every day and I'm going to react where I should. We hit the buy first today, so I went long. Yesterday, we hit the sell first. I wasn't in a short. I let it come back to the buy zone. I went long, and I caught that long up for a new high. Then I started entering shorts. Yesterday we played the 372 call up, and then the 370 put back. And just for fun, I can pull those up to show you. Just remember, on SPY, we hit sell zone, then buy zone, then through sell zone, then back down to purple. So as we go look at that call and put, 22, 10, 19, call 372. There we go. I might need to give it more than a day just to get back, since it's a previous day's expiration. Oh, it should still have the levels, but I guess this tool doesn't. Well, let's check that 370 put. Sorry, I thought this tool would still be ready for a couple of days ago's, or yesterday's options. Okay, well at least the put is still available to us. It wasn't the 372, it was the 370 that I called out in the room. So we can at least see the put, and where did it land? At the highs on SPY, right in our weekly buy zone, that beast zone. So I called that out yesterday, and I took entry at this $1.20. So I let it get down into that buy zone, start to push, come back and test, start to push, picked it up on this test at around $1.20, and it went up to 450, up at our sell levels. So every day I'm just reacting when I should. So it's a great point that you brought up, why trade. So that's why I wanted to cover it, that the system can really help you. You don't have to know where we're going today, but you can react where you should to take position when you should. And it should line up every day really well on your options and your equity. Can we go down from here? Our put's at a buy zone, then it's worth a shot. That kind of thing. So thanks everybody for tuning in. Going to end the stream there. And we'll see you all back in the room tomorrow for our free Friday, where you can test out the tools again. Thanks for your time. Appreciate you guys staying. Oh, wow, what's now an hour and a half after close. So definitely appreciate you. Have a good night.